Okay, so guys, in today's video I want to show you how you can be making lots of profits while you are trading on daily basis. Remember that in trading, what really matters is, first of all, you have to equip yourself with knowledge. You have to learn how the market works, okay, what moves the market and the structure of the market. You have to learn all of these things. If you don't have the knowledge, that means you're as good as a gambler. Okay, so first remember to learn, then after learning you can now apply your knowledge into actions. And also, unlike one of the books I read, it says trading in the zone. It mentioned that one of the greatest fear that we have is unable to manage risks. Risk management matters a lot. If you cannot manage your risks why you are a trader or why you want to become a trader, if you cannot manage risks, that means you are not ready for trading. Managing risks is also another part of skill. If you can learn how to manage risks, can you be able to risk $10 in order to make $20? Can you be able to risk $5 in order to make $30? Can you be able to risk $1,000 in order to make $10,000? These are the reasons why we do trading. Remember that trading has two opportunities. It's either you're buying or you're selling. In these two processes, you're still gonna earn. But before you start earning, you need a skill. Without skill, there is no way you can earn. Okay, and so if you're a beginner, I would advise you to go to Baby Pips. Go to babypips.com. Let's search for it. Go to babypips.com to learn what Forex. To learn a beginner-friendly theory and particular aspect of it. You see, it starts with a school of Pipsology. That is where you will learn. You see the roadmap. You're gonna learn everything you need to know about the basics of Forex. Okay, then you can now come to our network, our channel to learn technical analysis or technical and psychological analysis. But all we are showing you that the content we drop here, we're gonna help you. You need to follow up and remember to click the subscription button. Click and subscribe to us, to our channel, so that we will make much of this content to you, and we'll show you how you can be trading, what you need to do and what you need not to do. So let's continue. I want to analyze this pair, gold. This is one of my favorite pair, trading gold. If you learn technical analysis, you can trade anything, you can analyze anything, as long as it concerns with what as long as it involves what charts. Okay, you can analyze anything you want to analyze. So what do I have today for you? So if you look at my chart, you will observe this space like this. Now this is where I entered the trade yesterday, and the trade was coming down here. At some point it started going up again. Okay, so I'm going to explain the reason why this thing happens. So let's start. Then the reason why we have this push up here is because, in every trend there must be a retracement. Okay, there must be a retracement before trend continues. So you can see it is still coming up. Okay, and how do you analyze trade and how do you enter the trade? First of all, there are different strategies whereby you can analyze a trade. Okay, if you're a daily trader, I will specifically advise you to stay in daily time frame, 4 hours time frame, 15 minutes time frame for entry. Okay, so in daily time frame, I'll first of all go to 4 hours time frame. Then in this 4 hour time frame, what am I saying? What am I looking at 4 hours time frame? I want to check the market structure. What is the market giving me at the moment? What is the market saying? Okay, I look at the market structure. As you can see, the market is actually telling me that this thing is bullish. You can see it's going up. Okay, the market is telling me that today's trend is actually bullish. Then what happened? what happened at this point? If today's trend is bullish, what happened at this point? Okay, what happened at this point? Let me delete this. That is more reason I don't use trend lines, because trend lines sometimes can confuse you. Okay, trend lines sometimes can confuse you. If you notice something, you see that from here to here, I have drawn a point and there is two connection, 1, 2. If you go down, you will see there will be another connections. Okay, trading with trend lines is also good, but sometimes trend lines can actually confuse you. What about a case whereby you have a retracement? Okay, there is always a reversal. You get a rejection in the market. Trend cannot continue every time. Like this candle you're seeing, each and every one of these candles represent 4 hours. So if you're trading in 4 hours time frame, do not think that a chunk of these candles here represent. Do not think that a whole of this is 4 hours. No, each one of them is 4 hours time to trade, to close. Okay, each one of them is 4 hours time to close. So do not think that because you are seeing this that it represents in 4 hours this movement has. No, each one of it is 4 hours. That is why when you're doing your analysis, be very careful with your time frame. So I mean 4 hours time frame, what I want to do is to get a general picture of my market structure. Then my general picture of my market structure is that this thing is going uptrend, and here we have a break of structure. Whenever you have a break of structure, it means that trend is changing. Look at it here. We have a break of structure at this point. Okay, we have a break of structure at this point. Look at it. We have a break of structure at this point. Break of structure at this point means that this is the previous low, and this is the previous low. What happened? It breaks above this previous low and start coming down. So what is your new low? Your new low should be here. Okay, so your new low should be here. Then in that case, the structure of this market is trying to change. The narrative is trying to change from uptrend to downtrend. Let me show you example. Like for example, we have, in uptrend and downtrend, we have higher highs, higher lows and higher highs. This is the higher lows. Okay, this is the lower high, this is the higher lows. Okay, so here we have another one, we have another one. Then this one is trying to form like, as if they are equal, but they are not equal, and we have this push up. Okay, so this is a little retracement in the market, and in that case, before you enter a trade, you have to observe this before you now go into entering your point. So if I want to enter into this trade, and if I want to hop into this trade, then I'll go down to my 15 minutes. Then I will not see a lot of candle within that one particular candle in under 15 minutes. You see a lot of movement. Okay, if you look at 15 minutes time frame, it literally tells you that we are on downtrend. Okay, we are on downtrend. So what are you gonna do? You have to place your sell. You have to place your sell along this path. Okay, and place your stop loss, because I believe that this trend will actually definitely continue. You understand? So that is how to spot out a trend, and you do what? You enter into the market according to where the area of interest is. The area of interest, I mean, is where support and resistance is. Like from here, this will now be resistance. So you're gonna enter sell at this area. Let me delete this thing. Let me delete this one. Okay, so if I ask you where do you want to enter your trade right now? Where do you want to enter your trade right now? If I ask you where to enter your trade, since we have seen that this thing in 15 minutes, this thing is going down, and we want to take another entry in order to catch it up from here. Do you understand? So we want to take an entry, want to catch the movement to this point here. So you see that we have, okay, do we have a good risk to reward ratio? You see we have a good risk to reward. Look at it, we have 2.5. The ratio is 1:1. 2 you get is actually perfect, and our stop out is 22 pips, 22 point something pips. Look at it. Then our take profit is about 63 pips. That is a good trade was set up. So if you look at your setup and you look at your stop out and you look at your risk to reward ratio is 2.0 is not up to that, then you have to skip that trade. Okay, so what do we have at this point? We have that the general market is now coming down. Then we have a little retracement here. Unless you want to wait, okay, because sometimes you observe that this is the highest high here. You want to wait if it breaks above this high, this previous high. If it breaks above this previous high, that means the trend continues as in 4 hours. Okay, then but if it did not break above this high, that means we are still coming down. So you're gonna set your entry around this area. You're gonna set your entry around this area and target down, which is you're targeting massive setup. Okay, so that is my update. I don't want to bug you with much thing. That is my update. So tell me in the comment section how you analyze your page, and if any page you want also analyze for you, we can definitely do that. Thank you so much. Remember to subscribe and give this video a thumbs up, and see you in my next video, my next analysis by tomorrow.